Hello and welcome to the Baby Giants Investing Podcast. Join us as we chat about the weird and wild world of small cap investing, all while searching for the precious few fast-growing businesses that have a shot at becoming industry giants. This podcast is for entertainment purposes only and is strictly not intended as financial advice. Any opinions are general in nature and do not take into account your personal circumstances, needs, or objectives. Securities mentioned are for illustration purposes only, and this podcast should not influence investment decisions. You should read the relevant PDS and consider speaking to a financial advisor before making investment decisions. Past performance is no indicator of future returns. Podcast guests and their clients may hold positions in the securities discussed in this podcast. All right, we're back. Claude and Andrew in the house after an extended hiatus, extended break. Back, the world's changed. There's like a rally in small caps now after like bear market forever.
Yeah, can you guys go away more often? Now that we're back, small caps are going to crash, right?
Yeah, exactly. Well, that's why we had to do the podcast before the bull market's over, right?
Right.
Yeah, I was chatting with some friends who are big into US microcaps, and they're joking like, yeah, we got to enjoy it before it all crashes in like 3 weeks' time. But yeah, I guess that was kind of some of the big news over the last couple of months is the rotation. It all happened in one day. There was like this huge day where all the strategies, and I guess it's like a lot of quant strategies plus other people following them, particularly in the US, kind of all pivoted at the same time from, mega cap tech to small caps. You saw the Russell 2000, which is the smaller companies in the US, probably kind of pretty big by our standards, but smaller companies all, soaring in the same day that the Magnificent Seven, almost said Marga Seven. Been watching too much US election stuff. Magnificent Seven all fell. So, yeah, what do you guys think? Do you think small caps are back? What do you guys reckon about the small cap rotation?
I reckon it's probably got some time to play out because we've had an epically painful long run of small cap underperformance, right? Everything kind of came down in 2021 to it peaked in the end of 2021. 2022 was very, very ugly for smaller stocks, especially even like micro stocks. And then the recovery we've had since then throughout most, like a large part of 2023 and 2024 has been in the larger companies. That's been led by, stuff like Google, Nvidia, Meta, Apple in the US, and in Australia, we've got I guess like the bigger companies have been doing well, especially in the sort of tech or growth space. It's definitely been the bigger companies that have had a much better run over the last year. For example, if you wanted to look at some of our sort of tech leaders, Technology One, that's up from under 16 at the beginning of the year to 19 now. Pro Medicus, which I obviously own, has had a very strong run, also sitting quite close to all-time highs at the moment.
Got the PME mention in nice and early. Well done.
Well, it's more like just the theme anyway. Wise Tech, same theme. That's also had a strong run for the last year. So they're all sort of up and sitting not that far from all-time highs. So those guys have already benefited. Big recovery there. But in the small caps and the micro caps, it's been a lot tougher. Good micro cap, small cap funds are not making massive returns at the moment, even though the larger growth stocks have gone. So it makes sense to me that there could be a bit more of a rotation. It's logical for it to be a rotation eventually, because generally what happens is, the money flows into, say, large cap growth stocks, but then the pricing differential gets so different between the large caps to the small caps that it almost, if the market's at all efficient, it needs to bring up the smaller stuff as well. Now, you don't know how long that's going to run. If the bull market gets sort of really long in the tooth, that's when you see all the really tiny micro caps getting some decent flows in them as well. But generally, it sort of goes down the the market cap scale slowly. But it's definitely a good time because this gives an opportunity for companies that you might own that might be smaller growth companies that are outside the index at the moment. If they can just deliver over a period where also money's flowing into small caps, they can get a good, strong share price re-rate, and then that can maybe get them into the indices, which can also be like another little boost there. So, ultimately over time, that's kind of what you're looking for as a small cap investor. You don't want to make money just because the overall market's going up. You want to find the companies that are making the transition from baby to small to even one day large. But realistically, of course, that takes 10 years. Very occasionally it's overnight, but when there's a 1 year story from 0 to ASX 200, then usually the next part of the story is, and now people can short sell it, and they will. Because whatever happened to make that thing get from tiny to large really quickly, it was probably involving a whole lot of stock promotion and hype. So you kind of want the slow cooking ones if you're a long-term investor.
Yeah, I agree with a lot of that. I mean, I think it's just the search for value. Some of the stocks you mentioned there, I mean, they're really top quality businesses, but what, Zero, Wise Tech, what was the other one you mentioned? Or Prometheus? The
Yeah,
PEs there.
I left out Zero. I can't believe I left out Zero. Thank you for adding that in.
The PE in all of those cases is above 100. I mean, Technology One out of the ones you mentioned was the lowest I could find with a PE of 60. So it gets to a point where, I mean, it's the old Charlie Munger saying that no company, no matter how wonderful, is worth an infinite amount, right? And it's sort of like, well, it's a very crowded space and very concentrated there. So it's like, well, you've got to look further afield to have value, to find value. And I think we probably made this point before the break, but I'll repeat it, is that big sell-off in the small cap sort of tech space was actually pretty rational to my mind. We just gone through a period of a lot of free money. The only focus was revenue growth. A lot of companies are effectively just buying that revenue growth, but the economics were terrible, and there was certainly nothing flowing out the bottom end of that. And so everything got sold off, and I would say that's actually good rational market behavior. The less rational part of that was that within that sort of pile, a lot of actually pretty decent companies that had really attractive economics that were fulfilling on their opportunity the proverbial baby got thrown out with the bathwater there. And I think they're the ones that we've seen the most aggressive turnaround on and more, and actually reasonably well justified as well. So it's been very notable. I mean, you talk about when the peak of the small cap market was, it's pretty much to the week that we launched Strawman Premium. So it was sort of like a tough first year. But, recently, knocking it out of the park, not just sort of like sing our praises, but just
so make sure you tell us before you do any other product launches then. Thanks, mate.
Yeah. I've always been the ultimate reverse indicator, don't you worry. But our index is up 17% in the last 6 months versus 7.3%. I use that as a sort of a proxy to small cap index because it just tends to be the focus of the market. So yeah, small caps are back. And within that, it has definitely been the companies that, while small or maybe mid-cap in some examples, doing well. Revenue growth is there. They're on a much more sustainable footing. The opportunity remains attractive. And I think that's just where the value is. And so that's just only sensible that the market would realize that and go there eventually. Weighing versus voting machine, that old trope.
Well, I mean, that kind of opens up, because I think one that's been on Strawman and has been in the news a bit recently, we're planning to talk about anyway, was DroneShield. So this is, what should we say? I'll give a quick intro. So it's basically makes products which protect against drones, I guess would be the simplest thing.
Shields against drones.
Shields against drones.
Say.
So it has some that, I guess, disable the drone through electronic means. It's got this big, cool looking gun that stops a small drone from flying. And I guess it's more targeted on small drones as well. So, there's we talk about drones as kind of like a broad term, and it covers quite a wide range of things. We kind of see it in the Ukraine war at the moment. It's such an emerging field where you've got, first person view drones, like suicide drones. Those are kind of the small little ones. But then you have much larger, kind of closer to rockets, really, like autonomous planes that act like that as well. That wouldn't be something that DroneShield targets. But yeah, it's been on a soaring run over the last few months. It's some people kind of pointing to it as, the return of, I don't know, bubbly territory, or definitely bull market enthusiasm. Yeah, this one a little bit, Andrew. Did you have any thoughts on DroneShield to kick off?
Yeah, I mean, I had it on my Strawman portfolio. I still do have a little bit there, since 30 cents, just as a shove in a quick humble brag. You got to celebrate the wins when they happen. But this is, as I've mentioned before, I think this is sort of easily sort of labeled as a bit of a meme stock. It's cool technology, it's got the easy sort of level one thinking in terms of, there's a war, a lot of drones are being used. Hey, these guys protect against drones and the rest of it. The point I would make, though, is that the business is doing incredibly well. They are selling a ton of these things, and it's shifted into profitability. The growth is let me look it up here, just in the first half of 2024, revenues doubled 110%. That's there. Cash receipts, a lot of cash sort of flowing into the business. The pipeline has doubled in size. Tell me what's wrong with this story. Well, I'll tell you what's wrong with the story. The trouble with it is that the price just got silly. So it's that classic sort of pendulum swinging too far. And I guess the point that I would make, and I often do this as an exercise when you get in these kinds of situations, which is play around with some valuations, not because you're trying to settle on what you think what will happen, but just test what needs to kind of happen for that to make sense. And I went through that exercise recently on the site, and they've had this long-term target for a while of between 300 and 500 million in revenue by FY28. So I said, well, screw it. Let's say they top that. They do 600 million, and let's say they do a 15% net margin. By the way, I looked up other defense oriented companies around the globe. They tend to be 10% at best. So I don't feel as I was being
10% net margin.
Net margin, right? I don't think I was being timid there. Give it some huge terminal PE multiple, and it's just you barely get something that makes any sense under those very optimistic scenarios. So it's kind of like the bulls will say, yes, but look at it's growing and it's doing this and it's doing that. And say, okay, it does all of that, and you might get the average market return of around 10% or so over the coming years. So your upside is market average. Your downside is if they miss. And we've seen, I don't know how many times we need to see this story play out. It's not like the business is in great trouble, but it just doesn't grow at 110% forever. It's like they report next year and, it's only 60% revenue growth or something like that. And the market's priced in much, much more aggressive growth. So I think what you've had here is this, a lot of hot money, a lot of speculative money, a lot of sort of meme stock type money pump into this kind of thing. It just got to a ridiculous level, and the market rationally, to my mind, sold off. And, there's still, even at this current point, I would say there is still a decent degree of optimism in there, but it's a much more sensible valuation than it was when it was up at 260 or so.
Yeah. I mean, I think it's interesting the kind of how that happened, because it was, what would you call it? Parabolic, just soaring exponentially. And then it seems to have been brought down from like one guy tweeting. So it was Rodney Forrest tweeting that he had basically, with not too much more reasoning, just that he'd shorted it, and its price to PE multiple was very high. And that, I don't know if there was that, maybe the market was just ready for it to fall. Like everyone it had kind of exhausted all the buyers. That's probably what it was timing. But, the shares dropped 43% in a week after that. So I don't know, maybe it reflects that there was a lot of individual investors that were quite skittish, didn't really know why it had gone up so much. But it's kind of interesting to see the sociological dynamics of it.
That's exactly that. Look, this is all speculation. We don't know, but that is my speculation, is that this was attracting the kind of buyer that was shares are going up. I've heard it on some forum. Some mate has told me at the pub, there's this company called DroneShield. It's up 60% so far. Oh, it's going up. And I love the language it's always used there. People talk it about as like the tense is interesting. I'm a bit of a pedant, but I'll say, no, it has gone up. To say it's going up is a
prediction,
forward-looking kind of sort of statement. But that's the kind of discussion. It's like, it's going up, so I buy. And if you're that kind of person, and there are a lot of those kind of people, if you're that kind of person, you're also the kind of person that you sell when it goes down. It's going up, I'm in. Oh, it's going down, I'm out. Oh, now it's really going down, I'm out. They're not people, by and large. It sounds pretty elitist here, I know, but who have done a rigorous valuation and that have a clear view of the fundamentals of the business and what is a reasonable price to pay, margin of safety, all that usual stuff. They're buying because they bought because it went up. It's going down, they sold. And, it's the market just doing its thing.
Careful there.
What do you reckon about DroneShield, Claude? Do you have any thoughts on it?
Look, I think that it was overhyped, super overhyped, hence why it was a little bit ripe for a fall. Like it was momentum more than anything else that was probably like driving that move, and probably doesn't even tell us a whole lot, that the share price has come down. It was one of those situations that probably wasn't much ability to short the stock. We only see sort of a little bit of shorting starting to happen recently. So I'm guessing that the ability for anyone to even get a short position in the stock is relatively recent. That creates, often a lot more balance in the share price. Like once people can bet both ways, the market kind of works better, right? So I think it totally makes sense that the share price has come down. I don't think that I don't think the valuation made any sense at all at $2.50. And even now, I think that it's still very generous for what is ultimately, something that sells a device. And the reason that I say that is because selling a device is like quite a hard business. You have to manage, as you grow, you have to have more working capital for inventory, et cetera, et cetera. So it's not obvious. Like it's it got a bit hyped up there, and I'd say it's still pretty popular, pretty popular retail stock. We're seeing a lot of DroneShield popping up on like, most traded stock and all these like retail brokers, or at least in their top 5 and that kind of thing. So you have all the signs there where you got like a little bit of a market hype, a little bit of a market moment there. And of course, I would have loved to have participated in that by like, getting set way early. But then, now I'd be basically selling to lock it in, because you don't, sociologically, I don't see it getting much better than this in terms of it being like a crowd favorite and sort of theme du jour. So yeah, definitely cautious of that one. Not one for me at current prices. But, having said that, I was looking at it 20 cents, and if you'd known how well it was going to perform actual financials, at 20 cents, you would have bought shares. It genuinely has benefited from some strong demand here.
Yeah, nice. Yeah, I mean, I guess my thoughts kind of similar to what you mentioned, Andrew, looking at the long-term net margins for these types of businesses. Yeah, they're not high like normally. Like there's kind of that old like adage in the army that your weapons were created by the lowest cost bidder. Like everything that you rely on for your life is created. So like there is that dynamic that over time that tends to be what happens. And we've seen that with like EOS, how low the long-term net margins can be. But yeah, so I think that's something to keep in mind if you are thinking from a more evaluation basis. At the moment, they talk about 75% gross margins. That strikes me as really high gross margins. And I think that can reflect when you're in, particularly when there's a war happening. Like I'm not sure how much of this past sales, I tried to have a look, is just specifically Ukraine, for instance. But when you need something quickly, people will be willing to pay anything, especially relative, like the amount's been spent, $10 million is nothing in the $100 billion of the Ukraine war. So I think that is something to keep in mind, is that those can come down and that we could have just been in a really sweet spot for margins. And then the owners kind of selling all the shares that they could earlier in the year, like their entire current holding, different reasons, but it's not a great sign.
That's such a good point. But I'll just highlight that in hindsight, it was terrible timing. Like they could have sold at much higher prices.
That actually kind of makes it worse for me. I'd rather they sold at 270, because then they're like, 270 is crazy, but they sold at like 60 or 70 cents, right?
Yeah.
So like,
yes. Yeah.
It depends where you read it, but yeah, you're right. Like, they clearly could have sold and made a lot more, but on the flip side, like they thought they would rather have 60 or 70 cents than their shares, is kind of another way.
It's such a good point. Yeah. I guess the point I'm trying to make is that too often people go, they know something and it's about to go bad. Like they're getting just in front of it. And I guess it's all a relative thing. And you could say, well, it was pretty close to, but there's still, it's still $1.46 today, despite sort of falling from 260. So it's just a good reminder not to read. I mean, there is things to read into it. I got to be careful what I say here, but just the assumption too often I see from investors, they're selling, something is imminent, get out. I think it's too knee-jerk.
Yep.
But it is interesting when they are selling down.
Yes, looks like 68.8 cents. Yeah, I guess the last one was kind of what I was touching on, but Ukraine war spending, I don't think coming to an end, but you have a change potentially of government in the US. Trump is very explicitly says he's going to end the war on day one. We don't want to open up that whole conversation for the next half hour, but yeah, you could have this environment where there's less money that could be going towards that. I don't have a clear breakdown of how much specifically is Ukraine defense spending, but clearly it's what would be a very high margin source of business for them that could potentially stop quite quickly. And yeah, they've got a bit of inventory build up to clear if that happens. So yeah, that would be kind of my other kind of pause for concern.
It's an excellent point. Yeah. The thing that I found hard about this, and it's something that we bring up, I bring up often, but it's just because I struggle with it so much, is that you've really got to try and learn the right lessons from these experiences. So again, Claude mentioned Pro Medica, so I'll mention it again. It's like what the mistake there was, like being too value focused, right? Like what a mistake that has been. And then again, people could have said, 60 cents, there's a lot priced in there, and 80 cents. And I was very mindful of that as it was going to the moon. I was just sort of like, do I want to be too hard nosed on something that at least potentially has a long growth runway, hitting a bit of an inflection point, et cetera, et cetera, et cetera. Is the price a little bit frothy? Yeah. But how often does that happen and then it get like 10x more frothy? So it's just, it introduces this, it just messes with my brain in terms of I want to try and walk this fine line of being value conscious. Obviously, I need to be conscious of value, but not overthinking value. And it's a dilemma I find very difficult to reconcile. And in this instance, it was just sort of partial sales on the way up, and just sort of trying. Because here's the other thing: when something goes from 30 cents to 260, even if you start with a fairly modest weighting, it very rapidly becomes very big weighting. and a big weighting at a point in time where the value proposition isn't nearly as attractive as it was. And it's just, anyway, not to open that can of worms again,
Yep.
but I do struggle with it.
Just one other thing just came to mind, actually. A smart friend pointed out to me, in this field, it's hardware and it's also extremely fast moving technologically hardware, because it's an arms race in the most literal sense of the word, with DroneShield versus, drone, whatever you call it, adversaries. And so you constantly need to be doing R&D to stay ahead of that. And I think that's an important point, because it means that's kind of where equipment companies struggle the most, is when you have to do a lot of R&D, because you've spent all this time developing a product and you don't really get the full, cash reaping, high cash generation from that product. You have to pour it back into more R&D just to stay ahead. So I think that's something to keep in mind. It's not something that's kind of a big issue for them right now, but again, something to keep in mind over the long term is how much you need to reinvest just to stay ahead of the adversary.
Yeah, I mean, all of this is just really a long-winded way of sort of saying that business is hard. Things go wrong, and you want to have a little bit of a buffer or a margin of safety in there just to account for that. And when you get to these prices, you don't have that. It's price to perfection and then some, which is just almost always 99.9999% of the time, just a very precarious situation. So be careful.
Yeah, sure. All right, Claude, did you want to chat through advanced braking?
Yeah, so this is a little microcap. By way of disclosure, I do have a small amount of shares in it. And essentially, it reported its quarterly today. And one of the interesting things they do in their quarterly is that they also say, some of their profit and loss figures, including revenue, gross margin, and net profit after tax. So the result today that they put out was $1.7 million net profit after tax, which is not bad given advanced braking is just a tiny little company of about $25 million market cap. So overall, I thought it was pretty decent. It's only 10% growth, but it is just one of those unusual little situations where you have a small microcap company that's sort of steadily growing profit and revenue. What they do is they sell fail-safe sealed integrated brake systems. This is essentially extra good brakes that go on mining trucks or other heavy sort of large trucks to make them safer if there's any kind of failure or if they're in, dangerous situations like at a mine or something like that. So overall, the theory would be that this is another little company that operates in a mining niche in Australia. I think that we've seen a few of those over the years that have done pretty well. So there's that element of pattern recognition there. You see Laser Bonders has built a pretty good business over the years. You see XRF Scientific has built a pretty good business over the years, both being in little sort of technology niches that probably the reason that these kind of businesses exist in Australia is because they've got good demand for mining and I guess, the kind of systems whereby you can build a business in Australia because people are sort of honest enough and they'll pay you, et cetera, et cetera. So overall, I think that there's some pattern recognition there that makes me interested in it, hence why I have just like a small holding in it. And as long as they keep growing profit over time, then you should at least do as well as, the profit growth, in my opinion, because the PE ratio based on the FY 2024 profit's pretty reasonable. So I wouldn't expect too much multiple contraction if the profit keeps growing. So that's your gambit. Reasonable bet based on the history. I think that they've, not perfectly, but they generally have been growing their profit over the last couple of years or few years even. So that's the theory. It's not particularly sophisticated, but part of the reason I wanted to talk about it on the podcast is because we do from time to time get, really helpful emails from listeners who might have a bit of a into the mining industry or actually understand how these products are used or what their reputation is with the customers. And I'd be super fascinated to hear any of that because it being a very niche product, I haven't been able to find, much consumer feedback. It's not like you can jump on Reddit and the mining guys are all like tapping away their product review. And it's not like an IT software company where there's this, if it's being used, then the IT guys are there writing about it and sharing information. I just can't find the same in the world of sort of niche mining products. So very interested to hear any experts' opinion on the advanced braking technologies, fail-safe brakes. Would love to hear about it.
Yeah, it looks like an interesting company. Geez, it's liquid though, right? Like I guess the market's only just open. 10 grand's worth of trade in the first 40 or so minutes or so. Have you found it difficult to build a position in it?
Well, I think for such a tiny liquid company, you want to keep your position pretty small. So that sort of solves in some ways the illiquidity problem in the sense that for me, when at cost anyway, it was a sub 1% position. So I did that. I built that over a few different days. So obviously, it's one that you'd get stuck in if you bought any serious amount of money. And also, I'm not saying that I'm definitely not recommending that, and saying it's obviously the kind of speculative microcap that I have a particular interest in and keen to play in that space generally. But that doesn't mean it's appropriate for anyone, and you can absolutely get stuck in poor quality little companies, and that has happened to me before. I obviously think ABV, advanced braking technology, with its chipping away at its profit growth, etc. I obviously think that it's going to have a better result, but there's no guarantees. And of course, with a tiny business, that 1.7, one big event can just eat away that entire profit. And I might also say it's a little bit of a capital intensive business as well, or it's not pure cash that they get to keep. You may be getting a profit for the full year of 1.7, but the operating cash flow, I'm glad that I brought this up because this is a real negative, was only 335,000. So, that profit is ending up, largely in all of the, the costs that the working capital essentially they need to run this manufacturing business that produces this physical item. So that's your negative right there. It's not like it's some hugely amazing business model. Hence why I'm not going to try and say, oh yeah, the PE ratio of 15 is going to expand massively. I have no idea. Yes, sorry about that child in the background.
It's quite a scary bull case you're painting. It's like screaming in the background.
We need to close doors in this house. I'll be back.
It's all good.
Yeah. Not that the liquidity bothers me, by the way. I just curious.
And don't forget they released quarterly this morning, so it's probably a highly liquid day for them, I'd imagine. Yeah. So, and I think the other thing, Claude's just stepped away. I don't know if you can hear me, but the other thing, I guess, with some of these mining companies that have done well is kind of the stage in the cycle, the mining cycle that we're at. So, yeah, I mean, it has been a good period, I guess, for some of these mining services companies in general, and something I'm mindful of. Obviously, Mader Group's one that we own and that I've owned for quite a long time. But I guess we'll see when the mining cycle turns. I mean, I liked about that is I think it's more tied to maintenance and less cyclical. But obviously, everything will improve during the next downturn. But yeah, I guess one thing to keep an eye on is how far through a cycle we are, especially if you're closer to selling capital equipment. People can kind of, I guess, stop expanding their capital stocks of vehicles and other things, and so capital equipment sales can dry up sooner. I mean, yeah, at least brakes probably more tied to, ongoing usage than some other, new build capital equipment like a Caterpillar digger or something. But yeah, it's something to keep in mind. I'm also mindful of it with XRF is just how much, what stage of the cycle are we in? They have some capital equipment sales as well. So yeah,
I should note also, I mentioned XRF, I do own shares in that as well. And I completely agree, Matt, but both of them are sort of definitely have real cyclicality risk there. And I think that's something I keep in mind when I think about position size as well for that kind of business.
Yeah, no, I don't know. There's just kind of broadly, I guess the macro stuff. There's been more stuff coming out of China. I don't really have a view. I don't know if you guys have you could touch on it quickly, but where we are at in the mining cycle. I guess for me, it really depends on what happens in China. So just because of how much of various commodities of ours that they buy. And there was kind of something recent, I think it was yesterday's paper, it might have been, talking about the three kind of things that are all happening in China at the same time. So their property market is in trouble. The investment market, which is like listed companies, has been in a downturn, and now they're kind of talking about trouble in the bond market as they try to shore it up. At the same time, China seems to have been stockpiling a lot of commodities, so there's also kind of a concern: are they just building up? Well, it's kind of concerning when one of the kind of major powers starts stockpiling. Like, what are you stockpiling for? But also just that it could mean the throughput of demand isn't as high, right? Like if you stockpile a lot of iron ore, then the sales you've been doing recently to China may not be like real end-use demand, and at some point you stop stockpiling, and then demand, consumption falls or purchases fall without even any fall in underlying demand. Yes, there's a few things. I also think property, we talked about this like a dozen times on the pod, but there's it seems to be more of a lag than I at first appreciated, where new construction has stopped, but there's still a lot of existing construction in the pipeline. So we haven't really seen it flow through too much to the bulk commodities yet. But yeah, I don't know if you guys have any thoughts on that. That's my kind of thoughts on the cycle at the moment.
I mean, I agree, but
doesn't happen. You've heard it.
It doesn't happen. Yeah. I mean, how many times have I gone, me of all people, it's doesn't seem sustainable. Since forever. I was like, well, it turns out it can be a lot less sustainable and still be fine. So it's not, I think I'm extremely high conviction that at some point there kind of mathematically needs to be a reckoning of some description. Yeah. But is it next year or is it 8 years away? I mean, it's a long time to wait.
Totally. It's a whole career. Some people have a whole career in 10 years. Markets.
And so, that's the diabolically difficult part.
Yeah, for sure. Claude, did you have another company you wanted to touch on?
Yeah. I wanted to also touch on a failure of mine. I think maybe 6 months ago, I chatted about Adacel and outlined, I guess, my thesis that there was like a shift in that company's fortunes because they'd won back this large FAA contract, which they'd previously had many years ago. And when they'd had this contract before, they'd been a much more profitable company. And then they had won back this very large contract. It was US $59 million over 5 years. And then essentially what we found out much more recently is that shortly following the award of this contract to Adacel, a protest was filed with the Office of Dispute Resolution for Acquisition. Well, that was sort of old news, but the more important thing is that this protest had been sort of upheld to a degree, and the Office of Dispute Resolution for Acquisition had recommended that the FAA allow competing bidder to Adacel to resubmit certain elements of its proposal, and this new proposal be reevaluated by the FAA against Adacel's original bid, with a decision expected early September 2024. So unbelievably, and certainly, well beyond what I'd countenanced when I considered the stock previously, is that this huge contract that they'd announced they'd won is now, I guess, up in the air again. Now, I agonized because I don't know how to weight or probability weight the potential that Adacel could now lose this contract or part of this contract to AdSync, its competitor. But, I guess it has lost the contract to AdSync before, so it's not impossible. And I am just unclear. The main issue seemed to relate to the fact that Adacel knew that the software was going to be their software, so that made it easier for them to put together a bid for the hardware side of things, whereas AdSync had to consider, the more uncertainty because they didn't know what software was going to be used. And the thing that makes me a little bit worried is that I guess AdSync had scored a little bit better in, I guess, past performance. The public version of the decision, basically, Adacel seemed to have offered a lower price, whereas AdSync scored better on past performance of contract or whatever. And I think so there's some risk that they could lose some part or all of that contract, which was basically my entire thesis was predicated on that they'd won back this contract. And so, yeah, I sold it around current prices after this bad news had come out and took the loss just because the thesis was broken. If they keep this contract now, then, I definitely think that it's pretty cheap. The contract revenue was like substantially more than the current market cap, like multiples of it. So yeah, overall, bad news for me, just the thesis busting thing. So I just followed the process and sold because the thesis was busted. Look, my logic is if it's that attractive now at the lower price, then I could always, thumbsuck it, figure it out and buy back in if I wanted to. So just to get a clean slate there, just to realize it hasn't gone to plan, which is obviously annoying and disappointment. But I just wanted to follow up on that basically because I'd outlined this thesis about this new big contract that then just has been thrown into question. So there's the update on Adacel.
It's just a really hard business, Claude? Like you never know. Like it just shows how hard these government contracts are. Like it's so hard to know as an outsider what's going on with them, right? Like that seemed to me at least, looking, I don't know, but seemed to come right out of left field. That idea that you have to renegotiate the whole contract or rebid for the whole contract, and it seems super hard to know what's going on.
It is hard to know what's going on, and also why is it that like a company like Technology One can flourish dealing with government and bureaucratic organizations like universities and stuff like that, whereas a company like Adacel or Alcidion, which also reported today and I own shares in, why do they have so much trouble dealing with government and have such a bad time of it? It's just hard for me to pick.
What do you reckon? Do you have any thoughts? Any hypotheses on why?
I think probably the conclusion that has to be reached is it depends on the specific agencies you're dealing with, the part of the government you're dealing with. I guess it's possibly just not correct or useful to think about government as one overall body that might be like different levels of processes and ability to act in different parts of government. So perhaps one mistake I've made is not like think more deeply about the exact agency or department that they're trying to sell to.
Yeah, I think that's a good point. The other one that I'd thought was like size. Just does Technology One get to a certain scale where one contract doesn't really move the needle as much for them? So like it obscures some of the volatility that might be underneath the surface. And then
right.
Yeah, and then I think also, I mean, the FAA contracts are just really long term, so maybe it's something of the nature of the type of deal as well, and how much like scrutiny is put upon them to, get the lowest cost bidder or whatever it is. Like that, I think that's kind of what happened with this case. So, but yeah, it's something I've wondered as well, because I see it a lot of the smaller government ones that really struggle, but there seems to be a certain point where they don't. And either I guess they've solved the reason, maybe that's why they get to be bigger, but also when you're small, like every contract matters and you just don't have the resources. Like Technology One's so proactive, right? Like they're engaging before people even consider a tender. They're like, hey, they're like whispering in the ear, like, hey, do you want to do a tender for this thing?
Oh, you beat me to it.
But that just
It's
takes
relationships.
Yeah.
It's relation. I'd love. This is the tinfoil hat kind of response, but it's who you know, right? It just, the older I get, the more I recognize it. That's just the way that the world works these days. I think as a naive younger person, I thought that it was the merits of the pitch that was put forward, and there's really sort of objective, detailed, rigorous analysis, and it's like maybe in some cases, but I think it does help to know the right people. There's a reason why ex-government ministers go onto boards of companies. It's not because of their economic savviness. It's like, I know blah-de-blah, and I can pick up the phone and I can text them.
Yeah.
And it's, I don't actually think it's that much of a reach, and conspiracy is the wrong word, but it
doesn't need to be a conspiracy.
It's not a conspiracy.
Like it just lowers the friction of sales and whatever else.
Business is just relationships. You see it again and again and again. And if you've got someone that can open the doors, or when they ring a certain person, they pick up the phone, that is a competitive edge that you just can't put a dollar value on. It is significant. And so an A-Common or an Adacel just doesn't have that firepower, whereas a Technology One, I don't know the board or whatever, but I bet you there's someone who knows someone.
Well, it's also just a scale to invest in sales, right? So aside from the government connection, which I think you're absolutely right about, it's just having like 100 salespeople, versus like one, or two. Yeah. I think that just there's a certain tipping point where you've been in the industry long. You're like, you hold conferences for the government on stuff, like all that kind of, you get invited to whatever. I think that's all part of it.
And look, and the people in the government are the same as people in the private sector. Everyone is ass covering, right? So someone comes up and it's like, hi, we're Technology One. We do enterprise software for this, and this. And then here's another one. That looks cheaper. That looks better, but no one uses it. Like it's the whole, no one got fired for hiring IBM. Like it's exactly that phenomena. Whereas like a small little company comes in, it's like, well, who else do you use? I don't know. It seems risky. Am I going to put my ass on the line to, like, it sounds good, but I don't know. It's just, the big ones are just a safe bet. And more often than not, that's gonna carry a lot of weight.
Yeah, what you guys said reminded me of something that the CEO of Objective Corp, which also I own shares in, said once when I sort of asked him something along the lines of, and I'm just paraphrasing here, when you do lose a contract, like sort of why have you lost it or whatever? And his answer was essentially, oh, well, it means like we've like failed to engage way before the contracts ever come along, I guess. He sort of took it back to, it's, you need to have engaged like right before the tender is even put out, kind of thing. So I think that, yeah, as you said, look, it's relationships, it's ability to know what's coming and be part of the conversation, I guess, so that the government department sort of has you slightly already in mind before they even put it to tender. And I suppose, to Matt's point, when you're a larger organization, the scale, you have more of the scale required to have that like always on engagement, I guess. Whereas if you're smaller, going from deal to deal, perhaps you lack the scale to have the sufficient number of people with the relationships that are just always there and able to pick up on this and meet up with so-and-so for lunch and that kind of thing. So I don't know exactly how it works. It's always felt, quite opaque. Obviously, you get I think the best results has sometimes come when it is like private companies, because in the purely like, I guess, capitalist sphere there, you have maybe more of like the kind of herding instincts of humans. So it can be a little bit and then sort of all at once, like wins. Like you're the top dog for a while and you're almost getting everything or something. I feel like that happens more easily in the very meritocratic, pure private industry, because they're like, hopefully, their own profit motive is leading them to the same result each time, potentially. Whereas with government, the same result each time could be for other reasons, not because this is the best product.
Yeah, that's a great framing. It's politics instead of, the optimal kind of product.
Yeah.
So if your product's just a bit better than the competition, you should win every deal, really, because you're better on that dimension. But if it's politics is so multifaceted. It could be like, oh, but you partnered with the wrong service implementation partner that we're trying to get rid of because they annoyed our minister by doing, like all those things that you don't know unless you have that sales team to know all those intricacies.
Exactly. So hence that could be a rational explanation for why these bigger companies that are more incumbent tend to do better selling to government. So
it's tricky for us, because we like small companies, and that's like all the return is buying Objective, back whenever you bought it, Andrew, and like holding it. And
did you buy it back then, Andrew? I remember you pitching at me, and
No, I didn't buy it. No,
sorry.
Yeah.
I thought your story was that you bought it.
I thought you were just trolling me.
No.
I was telling everyone about it. I go, this looks really great. I think it was one of those things where you go, oh, it'd be good if I could get it, 0.5% cheaper or something.
Sorry.
Sorry. Bring up some bad memories.
To torture myself, I checked through my old emails, and whilst I'd never bought it, I think actually maybe I did buy it. I think there was some, I had the trade requests and the trade history or whatever of I bought it at $2 something and sold it at $2.20 or something really painful.
When?
I'll check ShareSite literally right now, but there's some painful thing like that in my long trade history.
So investing in small cap gov, then do you avoid them altogether, or just kind of just be more mindful of it? Like, what do we think going forward of the lesson from that?
Oh gosh, I mean, I definitely would want a company that's got a history of being on the inside of the tent. They are used somewhere within government, and ideally in a system that is pretty sticky and difficult to change. I mean, that's another thing going for
you'd
technology.
want them already to have some scale, basically. So wait until they're a bit bigger might be part of the answer.
I think you want the reference client from within government elsewhere, because I think when you rock up, that is, to my earlier point, I think that's just a huge edge you have over on other people that may even have a better product. But if you can say we're used by the Department of Ed and the Department of Defense and these users, just makes it easier.
Yeah. So my first buy of Objective Corp was, this is the worst, $1.90 in December 2015, and I sold it for a loss in 2016.
All right, don't
I think that does show that, though, buying smaller companies that contract to government can be okay, because obviously Objective Corp just continued to go ahead, and the same could have been said with Data3 10 years ago. I guess it wasn't that small, but it was still a small cap, So I thought that you can win doing this, but you just got to figure out who the guys that have a process for winning the government contracts is.
Yep, very well put. Should we wrap it there, gents? Any other thoughts? Otherwise, we'll chat again next week. Good to be back.
Yeah, good to be back.
Yeah, thanks, guys. Should we say something we're grateful for now?
Oh, are we doing that again?
And leave everyone on a good note. I'm grateful for having a holiday. I feel very refreshed. It's the first holiday in 5 years or something. So yeah, I recommend it.
I'm grateful to be back talking to you guys.
Nice. That's a good one. Yeah, lots of things. Yeah, grateful too. I went for a trip with my kids. Been back for a while now, but yeah, went for a trip over to Europe with the kids. So very grateful to have that opportunity to do that and take them to see new things.
World expanding. Awesome.
For
Thanks,
sure.
guys. Thanks
Awesome.
for listening,
All
everyone.
Cheers, guys. Bye.
Cheers.